Hey, welcome back to Lunch at the Market. Today you're going to consider this message from us a public safety announcement, or PSA. If you're in LinkedIn, you should get out. Seriously, you should not own that stock. Look, so here's the facts. The stock IPO'd at $45 a share. That means if you had a ton of money, you gave someone $1 million, they gave you 22,222 shares of LinkedIn. Today you could sell it right now this second for $105. Look, that means that your investment of $1 million is now worth $2.333 million, and you are now a multi-millionaire. Can you imagine the economic benefit of having, say, 100 new multi-millionaires walking around, spending their newfound wealth on goods and services and products and their companies and themselves? And the wealth that can be generated out of this is tremendous and fantastic. And if we can get the LinkedIn shares into enough hands and spread it out over a huge investor base, then we should be good, right? Because then the loss will be very minimal if LinkedIn goes the other way, and we can all feel good about it. Look, if you have 22,222 shares, then just keep like 1,000 for old time's sake and cash in the rest of it. Because really, what more do you want to have 100% gain in the space of about 4 hours? I mean, that's a pretty good rate of return. If you annualize that, then that's like thousands of percent. So I say that you take it, right? And if there were options on it, we would have loved to do a strangle. And that's when you own a put and a call on the same stock, the same strike. And then when the thing plummeted down to $85, you pull the ripcord on the put. Your call's worth nothing, so you leave it on the table, and then boom, the next thing you know, the stock's up $20 and your call's up massively. That would have been amazing. Too bad they don't write options on stocks right away, right? Otherwise, we would have totally done that. What we did do that was really quick was yesterday when Jim Cramer said that Netflix could go up 12 points once we saw what LinkedIn was priced at or what it traded at. We saw that the 250 strike put calls that expire tomorrow were trading at 50 cents. I thought, what a cheap bet. You get a 10 lot, you throw $500 at it. It's like 0.0001 of a big portfolio. So if it goes against you, you just eat the loss. And then today, nicely around the open, those calls trade up to 75 cents. We said bears make money, bulls make money, pigs get slaughtered, and up 50% in not too long. It meant we took it off the table, and those same calls are only worth 15 cents now. So the moral of the story is, when you got a super gigantic gain, you should probably take it because gains don't last forever. And this LinkedIn, where we're at right now, it won't last forever. Okay, so get in, get out, make your money, and hope a lot of people end up with that stock all over the place, and that the damage is minimal if it goes down. There's just really no reason to continue to hold on to it. And so that's our message today. The other message is, man, Google, that sucker is one wild ride. So at the open, you could have rolled the top strike down to the bottom strike for $4,000. You could get $4 for selling the top strike and buying the bottom strike, basically essentially creating a short 530, 525 put spread. Then the stock proceeded to rally to $536. You could have bought back your 20 lot that you're short. If you started with a 10 lot, you could have bought back your 20 lot for about $900. So you'd net about $3,100, and then you paid $1,300. So you could net by the time the trade is all over about $1,800 in the trade. But you would have had to been super fast and have a stomach of steel and nerves of steel and know exactly what was going to happen before it happened or as it happened. And we didn't, and we don't have a crystal ball, and so it was easier just to kind of watch and see what happened. So again, we've got one more day, and this thing went from sub 530 to 536 in one day. And so there's every reason to believe in the world that something will happen tomorrow, and we'll try to trade around it as best we can. If the stock plummets but doesn't break 130 or 530, then you can roll that top strike down and then keep your fingers crossed and sweat all the way into the close, or at least until you can take those short put spreads off. We'll just have to play it by ear, but it's been a fun ride. The butterfly is only within about 10 cents from what we spent on it. And so it's not bad at all, right? Not bad. We'll see what happens tomorrow, but it's been a fun trade. It's a learning experience either way. If you do want to trade on Google, just so you know, the short 490, 480 put spreads out in September, you can actually get $2.15 for those. Considering that's $43 out of the money, and you get better than $2 for that. Now, keep in mind that it is $10 worth of risk. I'd really say what an attractive trade if it was $5 widespread and you can get $2.15 for it. That right there means you've got like a 50-50 shot of making profit on a trade like that. Your max loss on a trade where you take in 215 would only be like 35 cents. So you'd make that trade all day long. If you ever find one of those, please send us a message at MO Financial on Twitter, because we will be right in there with you if you can ever get $2.50 for a $5 widespread. All right, thanks so much for tuning in at Lunch of the Market. If you have LinkedIn, we really think you should strongly consider parting with it. And if you've got the Google Butterfly, then may the force be with you. And I hope that you trade it extremely well tomorrow, because you won't have the benefit of being able to look back, hindsight, and say you could have done this or that. So that's why we gave you the breakdown today at what possibly could be done, how you could possibly trade your way out of it if you are just so good it's not even funny. Ideally, though, the stock finishes below 533 or above, what is that, 527. As long as it stays between 527 and 533, then we're good. It's going to be a gain. I can't wait. We'll see what happens tomorrow. Thanks for joining us again today on Lunch of the Market. We'll see you then.